throughout your entire life, there may be a need of life insurance. Whether you are single, newly retired, or any stage in between, life insurance can be an important tool in your financial toolbox. The information below is meant to help you understand the need and is not meant to provide financial advice. Single. As a single adult at any age, life insurance tends to be overlooked. You are self-sufficient and don't have a partner or children who financially depend on you. However, there are still options to consider when it comes to life insurance. If you have any loans, mortgage, or debt with a cosigner, your death would leave your cosigner responsible to complete the payments. Another risk you may avoid is leaving end of life expenses to your loved ones. Lastly, if you find yourself financially supporting your elderly parents, you may consider cash value life insurance to help grow asset that you can use in the future to supplement retirement income. Newly married. Life insurance can be important at this stage is in life since you have added a partner to your life. The first step is to identify the amount of coverage you need to replace future lost income and cover any large debts that would put a burden on your partner. Start with our life insurance calculator tool and find a financial professional to discuss your results and next steps. Proud parents. As a parent, you are always looking out for your child's best interest. Life insurance should be considered when planning for their future. To get started, take into account the future cost of raising your children, including higher education as well as coverage for a stay at home parent if this applies. College education. In addition to covering yourself, some parents even consider buying life insurance for their children. Based on the type of insurance, it could be supplemental funds to cover any unexpected funeral expenses or more optimistically to accumulate cash value to use for your children's education. Empathy nesters. They say time flies, but you are now the proud owner of a newly quiet home. In this stage, you may not need as much life insurance as before since your children are out of the home, but it is still important to have protection if you are married and still working. At this stage, at this stage, it's best to work with your financial professional on state planning to be sure you have all your bases covered. Retired. Oh, you made it to retirement. What a great feeling. But planning for your financial future doesn't end here. You may not need as much coverage at this stage. Based on your long term planning and priorities in retirement, but you should still talk to your financial representative about your overall financial plan. In this stage, you could access your cash value from your life insurance policy to help supplement your retirement income. Well, there are some related items. Well, there are many tax advantages associated with the health saving accounts. Consider them healthcare IRAs that can be used after retirement. To have an HSA, you must also have high deductible insurance, which can cost more out of pocket for healthcare expenses, but you will have lower premiums and protection from catastrophic expenses. You will also be able to accumulate significant assets to pay for qualified healthcare expenses in retirement with tax-free withdrawals. In ways, these accounts are superior to most retirement accounts. In IRA Expert, ED Slots monthly bulletin, Ryan McCuman, CPA CFP summarized the advantages of HSAs. Benefits: your contributions to an HSA are tax deductible, aka above the line, regardless of your tax status or income, meaning your adjusted income or reduced, lowering your taxable income. Your distributions from the account are tax free if used for qualified health care expenses, and your earnings on contributions are tax free as long as they are used for qualified health care expenses. There is no use it or lose it rule. You do not have to spend the amount annually. Even after joining Medicare, you may continue to withdraw from your account tax free if the funds are used to qualified health care expenses. Your spouse, if named as beneficiary, automatically owns the account and has the same tax benefits as the original owner. The account is portable if you choose to roll the account to another HSA. Well guys, if you liked my video, please subscribe, share and like my videos. If you want to ask a question, you just have to leave a comment below. For the next time, take care, goodbye.